Hello guys, welcome back to another exciting weekly forex analysis. Now in today's video we are going to consider pound dollar, euro dollar and gold. Now we have been talking about pound dollar for a while now. In fact, even the three instruments that I mentioned, we have been discussing about them in our previous episodes of our weekly forex analysis. So if you haven't watched them, please go to our playlist where you have Let's Analyze Together. The playlist titled Let's Analyze Together, you'll find all the episodes there. Now this is pound dollar daily time frame, and as you can see, we identify that this is our high, our current high, that is, and our current low. We said we are bearish. Why? Because we turned bearish here, all right, when price broke this structure here. Let me show that to you quickly. I don't want to keep long or tarry on this pair anymore. All right, so at that point price turned bearish. Okay, that was where we have a change of character, and after that change of character we are now bearish, and therefore we now said our high, this is our high, our range high and our range low is here. And from this point we started saying, all right, from our previous episodes, that price was free to travel back higher to tap into this extreme OB, because this is your high probability OB before we see any form of price dropping. Okay, and then that is exactly what price is trying to do. And I told you that you should not expect price to just go in a straight line to tap on this extreme OB before falling. We need to see some form of retracement, price gyrating and printing higher highs and higher lows. All right, that is how the market moves until it gets to this extreme OB. All right, and that is exactly what the market is doing. And on the lower time frame, we have been capitalizing on the movement of price to get to this extreme OB, all right, to take high probability trades. All right, and I'm going to show that to you when we get to the 1 hour time frame. All right, so but now when price, as of Friday when price closed, this is where price is now. Take a look, price printed this high and came down to take out that the low of that high. All right, okay, and then price printed this bullish candle, but this bullish candle did not go to break this high and close above it, all right, or break this high either by a candle wick or by a candle body. All right, so what we are expecting in this coming week is for price, if price can do something like this, take out this high. Once it takes out this high and comes back down to take out this inducement here, all right, after that inducement, if price gives us any form of a lower time frame confirmation using TNCP, we will be more than happy to take price higher. All right, so that's the first scenario that can happen. The second scenario is for price to take out this inducement, that is if it breaks this high in the coming week and takes out this inducement, and then we want to see price travel back down to this DOB here. This is both your DOB and your extreme OB, so we want to see it tap into this OB and then go higher. But the possibility of price traveling back down all the way down here is very remote. All right, but price can do anything, but it is very remote. So that is the picture. But the next scenario that we can be looking at is for price to maybe create a new structure, all right, such as this, create new structures, all right, take out inducement, tap on any OB and then go higher to tap on this extreme OB, all right, before we see any form of price dropping down. All right, so that is the picture that we are looking at on the daily time frame. It's as simple as that. Now, but if we scale down to the 1 hour time frame to see what 1 hour time frame is doing, now take a look at this 1 hour time frame. Now we are here on the 1 hour time frame, and I've told you price cannot just travel in a straight line, all right, until it gets to that daily extreme OB. I've told you that. So in the course of last week, we had opportunities to join the market to take price higher, all right, and so we look at it here. All right, look at it here. We look at this very point of interest here. All right, that price will come and tap into it before going higher, and price actually did exactly the same. And therefore in the course of the week also, we also identify this point of interest here, and then we said price will come. All right, all of this, we posted these things on our Telegram channel, as you can see here. Look at our Telegram channel here. All right, so we called this trade before it happened, and it actually happened. And then if you scroll down, you will still see more. All right, look at what we called price came and started tapping on this, our point of interest here. And then the second one we call, this one here, is this one. Look at it. It happened here. Price went up. All right, price went up, and so we made a lot of gains within the week. Okay, so now let's see what are we expecting pound dollar to do on the 1 hour time frame. Well, as you can see, we have this high, this 1 hour high, all right, to contend with. Now we want to see price. We want to see price now take out this 1 hour high, this one, this very 1 hour high, because this is key. If it takes it out, all right, and start giving us some form of structures to work on, all right, like this. Maybe we take out this inducement, tap on any OB, and then see any form of price going higher. That is what we are looking at on the 1 hour time frame. All right, I quite doubt if price will travel down all the way again to this zone. All right, because this zone has been heated several times before price went higher, and therefore this 1 hour will be a major point that we need to look at. If it takes it out and gives us any form of inducement and OB, then we will be more than happy to take it. All right, so that's the picture on GBPUSD, both on the daily time frame and on the 1H time frame. So let's quickly get to the EURUSD and see what price is doing on EURUSD. First of all, we go to the daily time frame of EURUSD and see what is going on here. Now, on the daily time frame of EURUSD, this was what we said. All right. Now we identify this as our high and this as our low. Let me just quickly identify that. We don't need to waste time on this because we have been discussing on this pair for quite some time. All right. So that's our high. That's our low. And I told you that this is our DOB. I told you that this is our DOB because a lot of guys mark the wrong places, the wrong place as their DOB. I said this is our DOB. All right. So after taking out this inducement, okay, understand that inducement was taken here to confirm this low here. Inducement was taken. So that was our inducement that was taken, and then the low was confirmed. And after that low, price went straight to this DOB. And then our extreme OB, like we discussed the other time, is this one. This is our actual OB. But now, if you look at this OB, this third candle has already mitigated it. So we want to see fair value gap. And therefore, we had to transfer that OB to the next candle. All right. So that's our extreme OB. This is our DOB and this is our extreme OB. And as you can see, price reacted off of this DOB. Remember, your DOB is a low probability zone, all right, but this is high probability zone, and therefore price reacted off of it. And then when price came back down from this DOB, look at what happened here. It took out this very daily time frame inducement. This is your daily time frame inducement. Now take a look at how it took it out. It took it out with a candle wick. Can you see that? Now what we are looking for this week, as price opens this week, is to find if we can find any confirmation, all right, to go long from here. All right, we want to see if we can have any confirmation. So if we have TNCP here formed, all right, then we'll be more than happy to see whether we can have lower time frame confirmation to take price higher to this extreme OB. All right, but if in the course of the week, maybe like Tuesday or so, price drops to close below this very low, then we'll be looking to take our trade on this OBs here, which I doubt so much. All right, this OB, this one. This OB, I hope that is the right OB. Yes, because it has imbalance. All right, so that's our DOB, and then this will become our extreme OB. This will become our extreme OB, guys. All right, but like I said, well, we are waiting to see what price will do in the coming week. But if price gives us TNCP here and confirms it with a lower time frame, all right, then we'll be more than happy to take price from there higher. But if price now comes and closes below this inducement, then we want to see price tap on this DOB and gives us lower time frame confirmation. But remember, this is a low probability zone. This is your high probability zone. So out of these two zones, we are looking to take trades higher. All right, so I need you to understand that. So quickly, let's get to gold and see what gold is doing. Now this is let's get to gold quickly. First of all, we go to the daily time frame of gold. All right, so this is the daily time frame of gold. Now, as you can see on gold has been pretty much bullish. This is your high, and this becomes your low in the market. All right, your daily high and your daily low, that is here, becomes your low here. All right, I want you to understand that. So that's your high and that's your low. So now we said our expectational order flow was for price to come and take out this major structure high here, and as you can see, that has happened here. All right, with the candle closure. So after that, look at what price has done here. Take a look. All right, price printed this high and came back down to take out the low of that candle that printed the high, and then price went higher. So this becomes your daily inducement in the market, guys. If price now comes back down to take out this inducement here, all right, if it wicks below this inducement and gives us TNCP, then we'll take price higher. Otherwise, if price closes below this inducement, we are looking at this daily time frame DOB for price to come and tap into and give us any form of reaction, lower time frame confirmation, and we take price higher. If that phase, remember, this is your DOB, it's a low probability zone. This is your extreme. This extreme OB is your high probability zone. So we want to see how price will play out in the course of the week. But remember, this inducement here is important. But if price doesn't come back to this inducement to take it out and create a new structure, we'll continue to follow the new structure according to our trading plan. So that is the picture on the daily time frame of gold. And so we want to quickly go to the 1 hour time frame to see what we should be expecting from gold. Now, as you can see on the 1 hour time frame, price, all right, has taken out our major structure high here with a candle closure. Now, let me tell you what we are expecting here on gold, because there is a break of structure on the higher time frame here. Now, what you need to see is for price. Take a look. Price went high and printed this high and came back down to take out the low of this candle that printed this high. So what we want to see now is for price to go higher, taking out this high. All right, once it takes out that high and then comes back down to take out this very inducement, this becomes your inducement in the market, guys. All right, on the 1H time frame, if it takes out that inducement, then what we should be waiting for is for price to give us if it goes out to take out this to take out this high, all right, and comes back down to take out this low, okay, this low now will become like chalk for us. All right, this is going to be chalk. This is not inducement. It's going to be like chalk. All right, why? Because on the higher time frame, it broke structure here and price close above it. So after that chalk, we want to see inducement taken in the market. And after inducement, you don't want to enter your trade from here, even if you find an OB. All right, any reason to enter trade from here? Because why? This is a fake chalk. All right, so you want to wait for price to take out the high that will be created. All right, takes out that high just like this. Please take note of what I'm showing you. Takes out that high and then comes back down, all right, to take out this chalk here again before creating an inducement, and then from here you can take price lower. All right, please take note, this is the picture we want to see happen here. Why? It is because price has taken out this major structural high on the higher time frame, and therefore for us to find any retracement after every break of structure, there is going to be a retracement, and so we want to trade a counter trend trade here. Why do we want to do that? We don't want to wait and watch price, all right, come back down to this daily time frame inducement to take it out before we can join price to go higher. So we want to be part of the move down to take out this daily time frame inducement before we can begin to go higher again. I hope you understand that, guys. So that is the picture of gold, both on the daily time frame and the 1 hour time frame. All right, so that will be the end of our weekly forex analysis today. Now, if you want us to be looking at more instruments in the market, I've told you this several times, you can drop it in the comment section, and I cannot assure you that we'll do justice to it. And if you haven't joined our free Telegram channel, please do so. You are missing a lot. We are posting on that free Telegram channel high probability trade setups, all right, every day, almost every day. So become part of it, and then you will be glad you did. All right, guys, I see you in our next weekly forex analysis.